What's up guys, welcome to Creating Cash Flow, where today I'm going to be doing a deep dive. I'm going to be doing my homework on JEPI, the JP Morgan Equity Premium Income ETF. So what this is going to look like is first we're going to go over some basic JEPI information. Then we're going to talk about the current and historical dividend yield. After that, we're going to talk about the top sectors and holdings. We're also going to be talking about ELNs, and finally stick around to the very end where I'm going to read to you the summary prospectus. It's a 4-page document that you definitely need to read, and because you're watching a YouTube video, I'm assuming you don't want to read it. You would rather have someone read it to you and just have the video run in the background. So I am going to do that. I'm going to read the summary prospectus. I already actually read the summary prospectus word for word, and it's a bit grindy, but you'll be grateful to have listened to all of it. And before we jump into it, I'd really appreciate it if you went and hit the like button and or subscribed. Also, if you listen to the entire summary prospectus and you find it helpful, there is an entire prospectus. The full size actual prospectus is 49 pages. And if you find this helpful, then I can start making videos where I read the entire prospectus so you don't have to. You can just listen and follow along. So let me know in the comments down below if that's something that you'd be interested in. So to kick off some of the basic info about JEPI, JEPI is an actively managed fund by JP Morgan that was created in May of 2020. So it's relatively new. The goal of this fund is to make current income while still benefiting from appreciation. So what my takeaway is from that is essentially they want to be able to pay out dividends on a regular basis. JEPI pays out a monthly dividend, and not only do they want to pay out dividends on a regular basis, they want to still have you benefit from appreciation of those stocks, which we'll get into it, but JEPI largely follows the S&P 500 index. So some basic things that you'll see right here are the expenses. The expenses come in at 0.35%, which I feel like is low-ish for an actively managed fund, and there is a 30-day SEC yield as of December 31st at 11.77%. And again, that is paid out monthly. But diving a little bit deeper into the dividend yield, let's jump over here to Seeking Alpha, where the dividend yield grade is an A+, and the dividend growth rate is an A-. So a chart that I find super helpful is this one, which is the dividend history chart, which goes all the way back from the very beginning, and it shows you when the dividend was paid out and for how much per share. So you're going to be able to see here that this is a monthly dividend, and the first payout was 0.4941. And as you go through here, you see it drops to 0.2898, then jumps back up to 0.4534, and essentially you get a quick scan of what this looks like over time. And a little bit better visual representation is right here. So starting at a payout of 49 cents, and the most recent payout was for 57 cents per share. So over the short lifespan of JEPI so far, they have stuck to their word of trying to find regular and current payouts. So now let's go see what their top sectors and their top holdings actually are. So right on the JP Morgan website, you can find all of this info, but the sector exposure. So communication services, 3.9%. Consumer discretionary, 5.7%. Consumer staples, 11.1%. Energy, 2.9%. Financials, 11.2%. Healthcare, 11.8%. Industrials, 12.3%. Information technology, 11.4%. Materials, 3.1%. Not applicable, 1.0%. Other, 14.7%. Real estate, 2.7%. Utilities, 7.6%. So if we go look at their top 10 holdings, we're going to see ExxonMobil, Progressive Corp, MasterCard, AbbVie Inc., Common Stock, Travelers, Comcast, Bristol Myers, Coca-Cola, United Health Group, and Visa as the top 10 holdings. But let's take a deeper look at all of the holdings. All right, so let me zoom in here. These are all of the holdings, so the top 10 will be represented here just as we mentioned, which means the 11th is the Hershey Company. So if we look at the security type in, you'll hear more about this in the summary prospectus, but here we have domestic common stock as the primary investment. Next, you'll see equity linked notes, which if you don't know what ELNs are, then one, you should definitely do your own research, but we also cover them in the summary prospectus where you can learn a little bit more about ELNs and the strategy of investing in ELNs and also the risks associated with that. So then we jump back to domestic common stock. You see a few more ELNs here, domestic common stock, and then finally there's a REIT or two. Yeah, we have a few REITs that we're invested in with JEPI. So domestic common stock is primary, ELNs is secondary, and then REITs is probably the third largest investment. And down here at the very bottom, which I had not seen previously, is equity index futures, which obviously represents a very small percentage of the overall fund. So now let's jump into the summary prospectus. I'm not gonna lie, this is not gonna be the most fun part of the video, but this is where you're gonna wanna perk up and pay some attention. This is the summary prospectus of JP Morgan's Equity Premium Income ETF, ticker symbol JEPI, also known as JEPI, from November 1st, 2022. Before you invest, you may want to review the fund's prospectus, which contains more information about the fund and its risks. You can find the fund's prospectus and other information about the fund, including the statement of additional information, online. You can also get this information at no cost by calling 1-844-457-6383 or by sending an email request to jpm.xf@jpmorgan.com or by asking any financial intermediary that offers shares of the fund. The fund's prospectus and statement of additional information, both dated November 1st, 2022, as may be supplemented from time to time, are incorporated by reference into this summary prospectus. What is the goal of the fund? The fund seeks current income while maintaining prospects for capital appreciation. Fees and expenses of the fund. The following table describes the fees and expenses that you may pay if you buy, hold, and sell shares of the fund. You may pay other fees such as brokerage commissions and other fees to financial intermediaries, which are not reflected in the tables and examples below. Annual fund operating expenses. Expenses that you pay each year as a percentage of the value of your investment. Management fees, 0.35%. Total annual fund operating expenses, 0.35. The fund's management agreement provides that the advisor will pay substantially all expenses of the fund, including expenses of the trust relating to the fund, except for the management fees, payments under the fund's 12B-1 plan, if any, interest expenses, dividend and interest expenses related to short sales, taxes, acquired fund fees, and expenses other than fees for funds advised by the advisor and or its affiliates, costs of holding shareholder meetings and litigation and potential litigation and other extraordinary expenses not incurred in the ordinary course of the fund's business. Additionally, the fund shall be responsible for its non-operating expenses, including brokerage commissions and fees and expenses associated with the fund's securities lending program if applicable. This example is intended to help you compare the cost of investing in the fund with the cost of investing in other funds. The example does not take into account brokerage commissions that you pay when purchasing or selling shares of the fund. The example assumes that you invest $10,000 in the fund for the time periods indicated. The example also assumes that your investment has a 5% return each year and that the fund's operating expenses remain the same. Your actual costs may be higher or lower. Whether or not you sell your shares, your costs would be year 1, 36, year 3, 113, year 5, 197, year 10, 443. Portfolio turnover. The fund pays transaction costs such as commissions when it buys and sells securities or turns over its portfolio. A higher portfolio turnover rate may indicate higher transaction costs and may result in higher taxes when shares are held in a taxable account. These costs, which are not reflected in annual fund operating expenses or in the example, affect the fund's performance during the fund's most recent fiscal year. The fund's portfolio turnover rate was 195% of the average value of its portfolio. What are the fund's main investment strategies? The investment objective of the fund is to seek current income while maintaining prospects for capital appreciation. The fund seeks to achieve this objective by 1. Creating an actively managed portfolio of equity securities comprised significantly of those included in the fund's primary benchmark, the Standard & Poor's 500 Total Return Index, S&P 500 Index, and 2. Through equity-linked notes, ELNs, selling call options with exposure to the S&P 500 Index. The resulting fund is designed to provide investors with performance that captures a majority of the returns associated with the S&P 500 Index, while exposing investors to lower volatility than the S&P 500 Index and also providing incremental income. The fund is managed in a way that seeks, under normal circumstances, to provide monthly distributions at a relatively stable level. Under normal circumstances, the fund invests at least 80% of its assets in equity securities, 80% policy. Assets means net assets plus the amount of borrowings for investment purposes. In calculating the 80% policy, the fund's equity investments will include common stocks and ELNs, as well as other equity securities. In implementing the fund's strategy, the fund invests significantly in the equity securities of companies included in the S&P 500 Index, which includes both large cap and mid cap companies. The fund may also invest in other equity securities not included in the S&P 500 Index. The fund may receive income to the extent it invests in equity securities of companies that pay dividends. However, securities are not selected based on anticipated dividend payments. The fund seeks a lower volatility level than the S&P 500 Index. Volatility is one way to measure risk and refers to the variability of the fund's or the market's returns. If the fund is successful in providing lower volatility, then the value of the fund's portfolio will fluctuate less than the S&P 500 Index over a full market cycle, typically a 3 to 5 year time horizon. In order to generate income, the fund may invest up to 20% of its net assets in ELNs. ELNs are structured as notes that are issued by counterparties, including banks, broker-dealers, or their affiliates, and that are designed to offer a return linked to the underlying instruments within the ELN. ELNs in which the fund invests are derivative instruments that are specially designed to combine the economic characteristics of the S&P 500 Index and written call options in a single note form and are not traded on an exchange. The options underlying the ELNs will be based on the benchmark or on exchange-traded funds ETFs that replicate the S&P 500 Index. Selling a call option entitles the seller to a premium equal to the value of the option at the time of trade. The ELNs owned by the fund are structured to use a covered call strategy and have short call positions embedded within them. When the fund purchases the ELN from the issuing counterparty, the fund is entitled to the premium generated by the short call position within the ELN. Therefore, the ELNs provide recurring cash flow to the fund based on the premiums received from selling the call options and are an important source of the fund's return. When the fund sells call options within an ELN, it receives a premium, but limits its opportunity to profit from an increase in the market value of either the underlying benchmark or ETF to the exercise price, plus the premium received. The maximum potential gain on an underlying instrument will be equal to the difference between the exercise price and the purchase price of the underlying benchmark or ETF at the time the option is written, plus the premium received. Investing in ELNs may also reduce the fund's volatility because the income from the ELNs would reduce potential losses incurred by the fund's equity portfolio. The ELNs are reset periodically to seek to better capitalize on current market conditions and opportunities. These resets assist the fund in seeking to provide relatively stable returns. Investment process. In managing the equity portion of the fund's portfolio, the advisor employs a 3-step process that combines research, valuation, and stock selection. The research findings allow the advisor to rank companies according to what it believes to be their relative value. The greater a company's estimated worth compared to the current market price of its stock, the more undervalued the company. The advisor's valuation rankings are produced with the help of a variety of models that quantify the research team's findings. After company securities are ranked, the advisor seeks to create a portfolio with a lower volatility level than the S&P 500 index. As part of its investment process, the advisor seeks to assess the impact of environmental, social, and governance (ESG) factors on many issuers in the universe in which the fund invests. The advisor's assessment is based on an analysis of key opportunities and risks across industries to seek to identify financially material issues with respect to the fund's investments in securities and ascertain key issues that merit engagement with issuers. These assessments may not be conclusive, and securities of issuers may be purchased and retained by the fund for reasons other than material ESG factors, while the fund may divest or not invest in securities of issuers that may be positively impacted by such factors. The fund buys and sells securities, stock selection, in accordance with its investment policies, using the research and valuation rankings as basis. Fund buys and sells securities, stock selection, in accordance with its investment policies, using the research and valuation rankings as a basis. In general, the advisor selects securities that are identified as attractive and considers selling them when they appear less attractive. Along with attractive valuation, the advisor often considers a number of other criteria, including catalysts, such as improving company fundamentals that could trigger a rise in a stock's price, impact on the overall risk of the portfolio, high perceived potential reward compared to perceived potential risk, possible temporary mispricings caused by market overreactions. The fund's main investment risks. The fund is subject to management risk and may not achieve its objective if the advisor's expectations regarding particular instruments or markets are not met. An investment in this fund or any other fund may not provide a complete investment program. The suitability of an investment in the fund should be considered based on the investment objective, strategies, and risks described in this prospectus, considered in light of all of the other investments in your portfolio, as well as your risk tolerance, financial goals, and time horizons. You may want to consult with a financial advisor to determine if this fund is suitable for you. The fund is subject to the main risks noted below, any of which may adversely affect the fund's net asset value, NAV, market price, performance, and ability to meet its investment objective. Equity market risk. The price of equity securities may rise or fall because of changes in the broad market or changes in a company's financial condition. Sometimes rapidly or unpredictably. These price movements may result from factors affecting individual companies, sectors, or industries selected for the fund's portfolio or the securities market as a whole, such as changes in economic or political conditions. When the value of the fund's securities goes down, your investment in the fund decreases in value. General market risk. Economies and financial markets throughout the world are becoming increasingly interconnected, which increases the likelihood that events or conditions in one country or region will adversely impact markets or issuers in other countries or regions. Securities in the fund's portfolio may underperform in comparison to securities in general financial markets, a particular financial market, or other asset classes due to a number of factors, including inflation or expectations for inflation, deflation or expectations for deflation, interest rates, global demand for particular products or resources, market instability, debt crises and downgrades, embargoes, tariffs, sanctions, and other trade barriers, regulatory events, other governmental trade or market control programs, and related geopolitical events. In addition, the value of the fund's investments may be negatively affected by the occurrence of the global events such as war, terrorism, environmental disasters, natural disasters or events, country instability, and infectious disease epidemics or pandemics. For example, the outbreak of COVID-19 has negatively affected economies, markets, and individual companies throughout the world, including those in which the fund invests. The effects of this pandemic to public health and business and market conditions, including, among other things, reduced consumer demand and economic output, supply chain disruptions, and increased government spending, may continue to have a significant negative impact on the performance of the fund's investments, increase the fund's volatility, negatively impact the fund's arbitrage and pricing mechanisms, exacerbate pre-existing political, social, and economic risks to the fund, and negatively impact broad segments of business and populations. In addition, governments, the regulatory agencies, or self-regulatory organizations have taken or may take actions in response to the pandemic that affect the instruments in which the fund invests, or the issuers of such instruments, in ways that could have a significant negative impact on the fund's investment performance. The duration and extent of COVID-19 and associated economic and market conditions and uncertainty over the long term cannot be reasonably estimated at this time. The ultimate impact of COVID-19 and the extent to which the associated conditions impact the fund will also depend on future developments, which are highly uncertain, difficult to accurately predict, and subject to frequent changes. Strategy risk. The advisor may not be successful in managing the fund with a lower level of volatility than the S&P 500 index. Depending on market conditions during a particular time in a market cycle, the fund's volatility at that time may not be lower than that of the S&P 500 index. Because the fund seeks lower relative volatility, the fund may underperform the S&P 500 index, particularly in rising markets. In addition, the fund does not guarantee that distributions will always be paid or will be paid at a relatively stable level. Equity-linked notes risk. When the fund invests in ELNs, it receives cash but limits its opportunity to profit from an increase in the market value of the instrument because of the limits relating to the call options written within the particular ELN. Investing in ELNs may be more costly to the fund than if the fund had invested in the underlying instruments directly. Investments in ELNs often have risks similar to the underlying instruments, which include market risk. In addition, since ELNs are in note form, ELNs are subject to certain debt securities risks, such as credit or counterparty risk. Should the prices of the underlying instruments move in an unexpected manner, the fund may not achieve the anticipated benefits of an investment in an ELN and may realize losses, which could be significant and could include the fund's entire principal investment. Investments in ELNs are also subject to liquidity risk, which may make ELNs difficult to sell and value. A lack of liquidity may also cause that the value of the ELN to decline. In addition, ELNs may exhibit price behavior that does not correlate with the underlying securities. The fund's ELN investments are subject to the risk that the issuers and/or counterparties will fail to make payments when due or default completely. Prices of the fund's ELN investments may be adversely affected if any of the issuers or counterparties it is invested in are subject to an actual or perceived deterioration in their credit quality. See Covered Call Strategy Risk below for more information about risks of the options held within the ELNs. Covered Call Strategy Risk. When the fund sells call options within an ELN, it receives cash but limits its opportunity to profit from an increase in the market value of the underlying instrument to the exercise price plus the premium received. The maximum potential gain on the underlying benchmark or ETF, each an underlying instrument, will be equal to the difference between the exercise price and the purchase price of the underlying instrument at the time the option is written, plus the premium received. In a rising market, the option may require an underlying instrument to be sold at an exercise price that is lower than would be received if the instrument was sold at the market price. If a call expires, the fund realizes a gain in the amount of the premium received, but because there may have been a decline, unrealized loss, in the market value of the underlying instrument during the option period, the loss realized may exceed such gain. If the underlying instrument declines by more than the option premium the fund receives, there will be a loss on the overall position. Large cap company risk. Because the fund invests principally in the large cap company securities, it may underperform other funds during periods when the fund's large cap securities are out of favor. Smaller company risk. Investments in securities of smaller companies, mid cap and small cap companies, may be riskier, less liquid, more volatile, and more vulnerable to economic, market, and industry changes than securities of larger, more established companies. The securities of smaller companies may trade less frequently and in smaller volumes than securities of larger companies. As a result, changes in the price of securities issued by such companies may be more sudden or erratic than the prices of securities of large capitalization companies, especially over the short term. These risks are higher for small cap companies. Industry and sector focus risk. At times, the fund may increase the relative emphasis of its investments in a particular industry or sector. The prices of securities of issuers in a particular industry or sector may be more susceptible to fluctuations due to changes in economic or business conditions, government regulations, availability of basic resources or supplies, or other events that affect that industry or sector more than securities of issuers in other industries and sectors. To the extent that the fund increases the relative emphasis of its investments in a particular industry or sector, its shares values may fluctuate in response to events affecting that industry or sector. High portfolio turnover risk. The fund will likely engage in active and frequent trading, leading to increased portfolio turnover, higher transaction costs, and the possibility that the recognition of capital gains will be accelerated, including short-term capital gains that will generally be taxable to shareholders as ordinary income. ETF shares trading risk. Shares are listed for trading on the NYSE Arca Inc., the exchange, and are bought and sold in the secondary market at market prices. The market prices of shares are expected to fluctuate, in some cases materially, in response to changes in the fund's NAV, the intraday value of the fund's holdings, and supply and demand for shares. The advisor cannot predict whether shares will trade above, below, or at their NAV. Disruptions to creations and redemptions, the existence of significant market volatility, or potential lack of an active trading market for the shares, including through a trading halt, as well as other factors, may result in the shares trading significantly above at a premium or below at a discount to NAV or to the intraday value of the fund's holdings. During such periods, you may incur significant losses if you sell your shares. Authorized participant concentration risk. Only an authorized participant may engage in creation or redemption transactions directly with the fund. The fund has a limited number of intermediaries that act as authorized participants, and none of these authorized participants is or will be obligated to engage in creation or redemption transactions. To the extent that these intermediaries exit the business or are unable to or choose not to proceed with creation and or redemption orders with respect to the fund and no other authorized participant creates or redeems, shares may trade at a discount to NAV and possibly face trading halts and or delisting. Investments in the fund are not deposits or obligations of or guaranteed or endorsed by any bank and are not insured or guaranteed by the FDIC, the Federal Reserve Board, or any other government agency. You could lose money investing in the fund. The fund's past performance. This section provides some indication of the risks of investing in the fund. The bar chart shows the performance of the fund's shares over the past calendar year. The table shows the average annual total returns for the past 1 year and life of the fund. It compares that performance to the S&P 500 index and the ICE BOFAML 3-month U.S. Treasury bill index. Past performance before and after taxes is not necessarily an indication of how the fund will perform in the future. Updated performance information is available by visiting www.jpmorganfunds.com or by calling 1-844-457-6383, 844-4JPM-ETF. Year-by-year returns, 21.61% in 2021. Best quarter, fourth quarter 2021, 8.86%. Worst quarter, third quarter 2021, minus 0.04%. the fund's year-to-date total return through 9/30/2022 was minus 13.12%. Average annual total returns for periods ended December 31st, 2021. Shares. Return before taxes. Past 1 year, 21.61%. Life of fund since May 20th, 2020, 25.23%. Return after taxes on distributions. Past 1 year, 18.43%. Return after taxes on distributions, life of fund since May 20th, 2020, 21.42%. Return after taxes on distributions and sale of fund shares, past 1 year, 12.83%. Life of fund, 17.78%. S&P 500 index reflects no deduction for fees, expenses, or taxes. Past 1 year, 28.71%. Life of fund, 36.08%. ICE BOFAML 3-month U.S. Treasury bill index reflects no deduction for fees, expenses, or taxes. Past 1 year, 0.05. Life of fund, 0.08. Management. JP Morgan Investment Management, Inc., the advisor. Portfolio manager. Hamilton Rayner, managed the fund since 2020. Primary title with investment advisor, managing director. Rafael Zingon, managed the fund since 2020. Primary title with investment advisor, managing director. Purchase and sale of shares. Individual shares of the fund may only be purchased and sold in secondary market transactions through brokers or financial intermediaries. Shares of the fund are listed for trading on the exchange, and because shares trade at market prices rather than NAV, shares of the fund may trade at a price greater than NAV, premium, or less than the NAV, discount. Certain affiliates of the fund and the advisor may purchase and resell shares pursuant to this prospectus. An investor may incur costs attributable to the difference between the highest price a buyer is willing to pay to purchase shares of the fund, bid, and the lowest price a seller is willing to accept for shares, ask, when buying or selling shares in the secondary market, the bid-ask spread. Recent information, including information about the fund's NAV, market price, premiums and discounts, and bid-ask spreads, is included on the fund's website at jpmorganfunds.com. Tax information. To the extent the fund makes distributions, those distributions will be taxed as ordinary income or capital gains, except when your investment is in an IRA, 401k plan, or other tax-advantaged investment plan, in which case you may be subject to federal income tax upon withdrawal from the tax-advantaged investment plan. Payments to broker-dealers and other financial intermediaries. If you purchase shares of the fund through a broker-dealer or other financial intermediary such as a bank, the advisor and its related companies may pay the financial intermediary for the sale of shares and related services. These payments may create a conflict of interest by influencing the broker-dealer or financial intermediary and your salesperson to recommend the fund over another investment. Ask your salesperson or visit your financial intermediary's website for more information. So after doing all of my homework on JEPI, I do like a lot of what I see. I like the monthly dividend payout. I like that the dividend yield has been so high and has remained pretty high throughout the course of the fund's life. I frankly still don't understand ELNs super well, even though it makes up a pretty small portion of the JEPI total investment. Still about 20% from the research that I've been able to find that is invested in ELNs, which is a pretty significant chunk. So that's definitely one hesitation for me. Another hesitation, which isn't crazy, but this fund just hasn't been around that long. So in the grand scheme of things, while it has been performing well, it hasn't been performing well for a very long time. So with those risks, and again, I'm not a financial advisor, definitely do your own research. This is just what I've been finding and researching on my own, and I was hoping it would be helpful to share with you. But I'm willing to buy and invest some of my money into JEPI. I don't think I'd invest anything over 5% of my entire portfolio, but I'd definitely be willing to add this to my investment portfolio and kind of watch it closely to really see how things pan out over the next year or two. Anyway, guys, with that, thank you so much for watching today's video. Again, remember, if you want to see the full prospectus, if you want to read the full prospectus, I'll add a link to it in the description down below. If you don't want to read the full prospectus and you'd rather have me read it out loud to you here, please put that in the comments down below. If that's helpful, I'm willing to do it. But if it's not, I definitely don't want to waste my time or yours in the future. So thanks again for watching. Take it easy.